Welcome to my seminar, First Time Homebuyers What You Need to Know, hosted by myself, Larissa McKenzie. The first thing you'll need to know is what you can afford. So this is determined by your income, your debt. Your debt to income ratio plays an important part in how much you will get approved for. Your down payment, we'll need to verify your down payment with your bank statements and also your savings account statements, 401k, and etc. Your credit score and what location you plan to purchase your home in. So, improve and maintain your credit. You can obtain free copies of your credit report. First, you want to pay off any delinquent credit. When you get your credit report, you want to look for discrepancies or errors in your credit report. Always pay your bills on time and try to keep your credit card balances low. You can visit annualcreditreport.com to get your free credit report. You'll also want to start saving early. So, when I purchased my first home, I moved in with a relative for 1 year and I was able to save up thousands of dollars that came in handy for my down payment, my closing costs, and purchasing furniture for my new home. Once you save up your down payment, the amount often depends on the type of home loan you acquire. You want to save for your closing costs. That includes taxes, insurance, appraisals, and other fees. The amount of closing costs will range from 2 to 5% of the loan amount. Down payment assistance programs are available even if you're not a first time home buyer. Working with us means greater insight into your finances and home readiness, exclusive access to home affordability products such as down payment assistance programs, saving thousands of dollars over the life of your loan. We always stay in touch with you so that when rates are lowered, we'll contact you to do a refinance. Initial approvals on conventional and FHA loans in as little as 15 minutes, even on the weekends, we are available. Consistent communication and transparency throughout the entire loan process and afterwards. So before you begin shopping for a home, let's talk about the process and why you need a pre-approval prior to shopping. You want to know exactly how much you qualify for before you go shopping because you don't want to get your hopes up by going out looking at homes and then getting pre-approved later to only to find out that you don't qualify for the homes that you fell in love with. So the documents you'll need to provide during the pre-approval process would be your bank statements. We'll need to verify that you have funds saved up for the closing costs and the down payment. Sometimes, depending on the loan product, you'll also need to have reserves. We'll verify your assets. We'll look at your debts. We'll also take a look at your income. You must have consistent, reliable employment history that will continue. We'll also look at your prior addresses and other critical information. Lenders may also request W 2 forms from the last 2 years, 30 days of pay stubs, bank statements to verify assets and income. We'll also need 2 years of your personal tax returns and 1099 forms. If you're a self employed borrower, business tax returns. And you'll also need a profit and loss statement. Sometimes the underwriter will require that a CPA sign off on your profit and loss statement. So once you get pre approved and you know exactly how much you qualify for, now it's time to go shopping. So you and your realtor will take your pre approval letter and you'll go shopping for homes. Next, you'll make an offer and then you'll negotiate the terms of the contract. So the types of offers would be a full price offer. For example, if a home is listed for 200,000, then you would offer 200,000. If a home is listed for 200,000, below asking price would be offering anything below 200,000. Sometimes it's not uncommon for people to make an offer over the asking price. For example, if the home is listed at 200,000, you may offer 205,000. Counter offers, once you submit an offer, once that offer is accepted, you can no longer do a counter offer. Once you do a counter offer, it cancels out the original offer. Earnest money deposit, a deposit placed on the home prior to closing. This impacts what happens if you back out of the deal. It will also be applied toward the down payment and your closing costs. Never skip a home inspection, even if you're purchasing a brand new home. A home inspection is typically paid by the home buyer. In this report, you'll receive details of any repairs that are needed or any concerns with the property. You can also use the inspection report as a negotiation tool. There's often a contingency in your purchase agreement. The loan application. This is a photo of a loan application when you apply for a home. We'll need personal information, your social security, date of birth, whether you are your marital status, your dependents, whether you'll be applying individually or jointly with a spouse or anyone else. So the home value is broken up into the loan amount and your equity. Conventional FHA and VA are just a few of the loan types available. So normally with a VA loan, there is zero down payment. Conventional down payment varies. Typically, with an FHA, you'll be required to put 3.5% down. Now, let's talk interest rates. Interest rates are fixed or adjustable. A fixed rate will remain the same throughout the entire life of your loan. Adjustable rates will adjust according to whatever period that you choose. Underwriting. In underwriting property, what are you trying to buy? Assets. Your assets will be investigated. So if you are a self borrower and you have money in a shoebox under your bed, you'll need to deposit that money into a banking institution. The underwriter will inquire where those funds were obtained. Credit. Have you paid back a loan before? Lenders typically will always require an appraisal. An appraisal is the process that determines the value of the home based on details of the home and the current market. The lender determines if the purchase price is supported. What if your purchase price is higher than the appraised value? Well, you may have to come out of pocket with the difference. Closing. The closing agent will prepare closing documents. The closing date may impact final costs. Work with your home loan expert during this time. Closing day, what to expect at closing. With processes like instant funding, your closing will likely not take longer than a couple of hours. At the closing, the sellers, the real estate agents, and closing agents, and sometimes the loan officer may attend. Everyone must sign all necessary documents. A notary verifies authenticity of signatures. Virtual and hybrid closing options are available. So you'll need to bring your government issued photo ID and your funds to close in the form of a cashier's check to the closing. The funds to close includes the down payment, the closing costs stated in the closing disclosures that you should have received prior to closing, and you will receive after the underwriting. What you will expect to leave with: copies of all your signed documents, information regarding when and where to make your first payment and how much. You will receive communication from your lender via email or mail with this information. You'll also receive tax forms to take to your city or county, and of course the keys if you have if you will immediately be occupying the residence after closing. So if you have any questions about the home buying process and what to expect, or you're ready to apply for a home loan, contact me, Larissa McKenzie, with Motto Mortgage at 770-639-3993. You can also begin the home buying process at www.mckenzie lending.com. Thanks for watching.